Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So I am going to divide the video in 4 different parts today. We're going to start with the trade recap. We're going to take a look at the trade setup that we discussed in the last video. I'm then going to talk about the tech stocks and how they are performing against the S&P 500 and the rest of the sectors in the S&P 500. I'm going to discuss whether I'm still looking for a bounce in the S&P 500 because that was the trade setup that I talked about, and then we're going to take a look at the long-term position that I have in the S&P 500 and whether I'm going to modify it anytime soon. So let's start with the trade recap. So we were looking for a quick bounce off of this support level. We had 2 levels that we were looking at, this 2,400 point level and this 2300 level right here. Now I do want to be clear, this was for a quick bounce. It was only for day traders, people that were actively trading and aiming for a couple percentage points within a couple days. So definitely not a long swing trade that we often have on this channel. So let's zoom in here and take a look at this wedge pattern that we highlighted in the last video. We had a downtrend line and we were looking for a break of this downtrend line. We did get a small break right here. We got a small bounce off of support here, but nothing significant. We were looking for a move to the red line right here and to this, potentially this 2700 level. But despite the RSI divergence showing that a bounce was possible, we did not have that bounce. Luckily, we did get stopped out in the intraday, so we didn't get gapped through our stop loss, which was right here at the 2400 level. This was the nearest resistance, so when the price started to get back under, that's bad news for the bullish case. Now, I think from the break of trend line to the stop loss, we had around 2% of loss, so not a horrible trade, especially considering that the potential we had on the trade from the break of trend line all the way to our target was 8%, so that's 1 to 4 risk reward, and the second target was almost 12%, 11%, so that is a very good risk reward, and I can't stress this enough. This is the larger part of trading, is to be able to consistently make trades with a high reward and low risk, so you can be wrong a few times and then still make a profitable trade in the end. Now, the fact that bullish technicals are not playing out, this is a typical wedge pattern with typical divergence that you'll see more often than not will trigger a rally. The fact that these bullish technicals are not playing out in the current market confirms to me the fact that we are actually in a bear market. And the comparison I have to that is the bearish technicals back here. We had many bearish technicals, wedge patterns for a long time on the S&P 500 that were not playing out. For example, this wedge pattern only got us a tiny drop in price. And now that we are in a bear market, we're likely to see the same thing with bullish technicals such as these that will likely not play out to the full extent that they would during a bull market. So now let's move on to how the tech stocks are performing against the S&P 500. So unlike the S&P 500, the tech stocks did get a bounce off of the same support level. We're going to take a look at 2 stocks, Netflix and Amazon, which are big components in the tech sector. They're part of the FANG stocks, and they did get that bounce that we were looking for. So let's type Netflix. So you can see Netflix did get a bounce a couple days ago from that same support. We did have divergence on the hourly chart on the RSI, which does not show up here. And we did get, again, a backtest of this uptrend line that we had for a while on Netflix. So again, I am going to discuss this later on in the video, but this is part of the reason why I'm not looking for a bounce anymore. I think the stocks that did bounce are now at resistance and are likely to reverse to go lower. Let's take a look at Amazon. Again, you can see Amazon did have a bounce off of this support and a multi-day bounce that we were looking for on the S&P 500, but apparently other sectors in the S&P 500 are bringing the S&P 500 down compared to some of the tech stocks that we have in QQQ in the NASDAQ 100. And so what does this tell me? This tells me that the tech sector is likely to hold up much better than the rest of the S&P 500 during this coming bear market. So in the future, when I want to make long trades on the S&P 500, we're going to take more of a look at QQQ and the NASDAQ 100 or other stocks like, again, Apple, Amazon, Netflix. And for bearish trade setups or bearish targets, we're going to take a look at the S&P 500 or other sectors in the S&P 500 like the healthcare sector, like the financials, which never got the bounce that we got in Amazon and Netflix. So I'm going to show you QQQ quickly and show you how it's holding up better than the S&P 500. You can see right here, it came down to this support level. And if you know the S&P 500 chart a little bit by heart, you'll know that we broke this level a while back and the S&P 500 is actually trading much below all the way down here. So the QQQ is holding up very well compared to the S&P 500. If you don't know what QQQ is, it's an ETF that's very tech heavy, so many of the big FANG stocks make up a high weighting in the QQQ. So let's get back to the S&P 500 and I'm going to discuss whether I'm still looking for a bounce. Now the S&P 500 is still dancing around the support zone. We haven't fully broken it yet. We are trading just below this support level. So the only scenario where I would see a probable bounce in the S&P 500 is if there is good news that comes out about the economy, about the current situation with the virus. So the S&P 500 is still able to rally. We have divergence on the RSI and news could spark a rally. However, as you guys know, I do not trade on news. If you are trading on news, you're already too late. So let's trade on probability and see what the charts tell us. We have broken this support level, so this is bad news for the bullish case. We failed the breakout of this wedge pattern, so again, bad news for the bullish case. And we have a bearish engulfing red candle right here. Usually these are reversal candles, these are topping candles, but they can occur in the middle of a downtrend, and again, it's not good news for the bullish case. So given the current volatile market environment, I'm going to give up this bounce trade and I'm going to wait for a sell signal which will come on a break below this 2280 level right here. This was the low that we made the other day. If the markets gap down below this level or start trading down through this level, that would be your next sell signal for the next target that we have, which would be the 2015 support level. Until we break this level, until we break through this 2280 level, we may dance around the support zone, continue consolidating around here, or even get the bounce a little bit later. Who knows what will happen, but I think the more profitable scenario would be to the short side. Now let's take a look at the longer term position. We're going to take a look at the weekly chart right here. So this is the weekly chart, and again we have this uptrend line that we had from the 2009 lows all the way to the 2020 top. So this was our bull market trend line and we recently finally broke it, and ever since that moment we have been in a bear market, at least in my opinion, and so I will be trading the S&P 500 like we are in a bear market from this point on, which was a couple weeks ago. And for my bear market case, my minimum target is still this 2100 level and this 1900 level right here. And if things get really bad, we might visit the 1500 level much later on. Now that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time. But before I do so, don't hesitate to drop a like and subscribe if you haven't already. This channel is growing very quickly and I'm really trying to keep it that way.